What's going on, guys? Welcome to another episode of ACM Insider. Today, we're talking with Mike Eshelman, who is the head of consumer finance at Jornaya, which is an amazing lead intelligence platform that helps you discover which of your customers and prospects are on a major life purchase journey, enabling you to take the most relevant and timely action while also and always honoring the consumer's privacy. So that said, Mike, thanks for joining us. How's it going today, my friend?
Pretty good over here. Thanks for having me on. I appreciate it.
Absolutely. So let's go ahead and just jump right in and let's get started with the basics. So for our audience who hasn't had a chance to meet you yet, or maybe they're not sure who Jornaya is, can you give us just a brief overview of your backstory and then who Jornaya is and the value that you guys bring to your clients?
Yeah, absolutely. So I got into mortgage about 16 or so years ago. Started at a consumer direct shop where I was a loan officer. I mean, this is back when I got a call from a recruiter, got hired, was in orientation for the first 3 or 4 hours of the day, and then on the phones in the afternoon taking applications. It was a vastly different mortgage world at that time. So originated, took on a sales team and had about 15 loan officers under me. Through my career, ultimately ended up moving over to more of the marketing side and ran marketing for a consumer direct lender. We had about 115 loan officers, focused a lot on online leads, direct mail, a bit of broadcast media as well. And through that, we were doing a lot of outbound dialing. So I needed to figure out how to better prioritize which consumers to call and when, and doing it in a compliant way. And that's when I got introduced to Jornaya, which I knew some people over there had a sense of what they were doing, but their TCPA Guardian product was something I needed. It was essentially proving that I was obtaining consent from the consumer to use automated dialing technology. So not sexy stuff at all, but definitely a requirement. And then started identifying all the additional intelligence data points that were coming along with that. How long the consumer was engaged on the website, how many other forms have they filled out across the lead generation ecosystem in the last week or month? How old was this lead that was being sent to me in real time?
Right.
So there was so much data coming across that I really just kind of started geeking out on that and learning how to optimize the use of that data in order to get better results. I even found segments in the data that said we had a 40% higher application rate whenever I saw a certain data point, but 90% of those applications were denied. So when you think about who to spend time on, it's not all about who you're going to get apps from, but who you're going to get approved apps from, so you get some good at bats. So that's really how I... Sorry, what was that?
I said it's kind of like a false positive that you're getting.
Absolutely. Yeah. And I mean, these are all, big indicators of what's driving performance and what's driving wasted time.
Right.
And so I just started spending a lot of time with Jornaya and my contacts over there and analyzing the data and actually helped beta test the new product called Activate, which monitors a lender's database or any customer contacts that you may have, and provides indications of when that consumer is in market, shopping around, visiting comparison shopping sites. So it could be someone in your database from a year ago, could be a past customer, an old lead. Knowing exactly when to reach out to them when they're in market is incredibly valuable. So I helped beta test that product through a bunch of various conversations. One thing led to the next, and I ended up joining Jornaya as the head of consumer finance about 2.5 years ago. And it's been a lot of fun since then. So yeah, that gives you a sense of my background and Jornaya and what we're doing for some lenders.
No, that's awesome. Well, one, glad that you joined the fun side, which is marketing. I love our loan officers because I wouldn't have a job otherwise, but I absolutely love the marketing aspect of it. I'll leave that up to them. I'll say that. Obviously, maybe same for you as well, because now you're over
on the fun side.
Yeah. So let me ask you this two-part question. And this kind of dives into from the technology side of things. In your mind, what does it mean to be a modern day loan officer in a modern day mortgage company? I think that as things are exponentially changing in the markets through technology, through social media, through what the buyer's expectations are, what would you categorize, or how would you differentiate what it means to be a modern day loan officer in a modern day mortgage company?
Yeah, buying technology and implementing a digital mortgage experience, that's easy. There's a lot of solutions out there. I have a personal experience from a few months back when I was shopping for a mortgage myself, which was the first time in 7 or so years of going through the mortgage process. And I recently had a podcast about this where I called it a tale of two lenders. And it's night and day difference. They both used, and I know this for a fact, they both used the same technology, but I had a fantastic experience with one and a horrible experience with another. So it's not just about buying technology or getting a good lead management system or CRM system. All of that stuff is easy, but understanding how to leverage it, how to leverage the bells and whistles and maximize how you use it. I mean, that's something that takes time, energy, effort. That's where the magic really happens. It's kind of when the orchestra plays together and it just sounds amazing.
Yeah.
That's the difference of today's modern, mortgage company or loan officer or marketer, is understanding how to use that tech stack together pretty seamlessly to create a good customer experience, as well as for the staff itself, making it easy for the loan officer, the processors, the underwriters, being able to prioritize who to call next, which file to work on next. But all of that stuff is a lot of that stuff can get missed because people think, oh, let's just go get Blend, let's just go get Roostify, and everything else will fall into place.
Right.
Really not the case. You have to work and understand how those technologies play together, and understand that it's really a journey with no specific destination.
Yep.
And that mindset needs to be embraced because it's ever evolving. And so staying on top with it is something that, that's important, because releases come out, new functionality comes out, and you want to be able to leverage that, and you want the consumer to be able to have the best experience possible. So that's my thought on what it means to be a modern day mortgage technology company today.
Yeah. And so what I'm hearing a lot of there is, where a lot of people think the buck stops, which is the technology stack, is really just the tip of the iceberg. But that other 90% that's underneath there is really diving in and better understanding the user experience. And the two other things, keywords I heard you using were talking about adapting and then evolving. And I think that a lot of times people, use a simple case example of, say, like an email marketing campaign or something like that. It's like, well, I did it. A lot of people are probably still using the exact same one that they were using a year or 2 years ago. So there's not really that taking into consideration like the evolution of not only the user's journey, but how you can further leverage the technology piece to better engage them throughout that journey. From your standpoint, how do you think that you marry those two things together, to constantly be adapting? Because one of my favorite sayings is, if you're not growing, you're dying, which could be said another way is, if you're not adapting or evolving, you're dying, right? And I think that there's a lot of companies and a lot of, probably even loan officers that are out there that are lacking in that area. So what would you encourage them to do? And I know I kind of spun this question around a little bit, but what would you do to encourage them, to continue diving in, better understanding the user journey so that they can adapt and evolve accordingly?
Yeah, well, it's interesting on the adaption side and the evolving side. I mean, data is another piece, and understanding the consumer data that's available.
Yep.
You mentioned, there's the shopping behaviors, for instance. A lot of people leverage credit triggers. Credit triggers have been out there for a long time. Obviously, a strong indicator that someone's in market if they apply with someone and all of a sudden it gets broadcast out to 10 or 20 different lenders. What we've done in the analysis with lenders and looking at, stringing together the shopping journey is Typically, a credit trigger happens about 70 days before the funding event actually occurs. We also know that 88% of consumers are going to go with the first or second lender that they speak with. Well, if you're utilizing credit triggers, it's fine if it's working for you, but you got to understand you're not the first lender and you're fighting tooth and nail to be the second one. And if you're not the second one, chances are you're not going to get it unless you absolutely are crushing it on pricing.
Yep.
But there's additional data that's out there today that wasn't available 3 years ago on shopping journeys. And that is, stuff like what Jornaya has. We can indicate when a consumer first starts landing on comparison shopping sites, which is 75 days plus before consumer ever becomes a credit trigger.
Yep.
Imagine how many more consumers you're going to have that first conversation with versus, chasing along with a bunch of other lenders after a credit trigger. So embracing the fact that and staying in tune, whether it's listening to podcasts, videos like this, attending conferences, digital mortgage is coming up, which is always a great one. Housing Wire Annual is coming up. There's some great ideas and innovations that come from that. So staying in tune with what's going on, and exploring those opportunities to see, is it something you should go out and acquire additional data? Is that going to move the needle? How are you actually going to be able to implement it? You mentioned emails as well. It's kind of painful for me with the servicer that I'm with currently, because every single week I get 2 to 3 emails from them. One is about a rate and term refinance and how I can save money, which, by the way, I can't because it's on an investment property and the way they're doing their calculations clearly on a primary residence.
So they're not even segmenting you or targeting you accurately.
Right. And they know a lot about me. They know it's an investment property.
Right.
I mean, they're servicing my loan. Then I receive a cash out offer, but then I also get, are you in market to buy a new home? I've been getting the same 3 type of emails for years.
Yeah.
And they haven't evolved into figuring out when I was in market for a new home purchase. They should have been all over it, focusing a purchase message to me and chasing me around all over the internet and placing some well-timed phone calls to me to have a chance. But fact is, they actually burned the relationship with me over all the over marketing on irrelevant messages that I actively made sure I didn't consider them for my next loan.
Of course, nobody wants to. There's nothing worse than just getting a barrage of emails, particularly when it's the same one or completely irrelevant to your situation or experience. That's one of the that's when I immediately hit the unsubscribe button. I'm like, nope, doesn't matter whether it's a service I've used before or technology, it doesn't matter. I'm like, nope, not doing it. I don't want to deal with this anymore. And that kind of leads to the next question from a technology standpoint, which I think is an interesting question. How do you see technology evolving the loan officer's role? And then I would even take that a step further, where I think that more companies now than ever realize that they need to adopt technology. They need to implement technology. But there's a difference between getting a thing and knowing how to use a thing. And particularly when you have multiple things that really aren't integrated in together. So I guess, this is another sort of 2-part question for you on the loan officer side and on the company side. On the loan officer side, how do you see technology evolving the role of the loan officer, within the scope of engaging with, a borrower or a lead? But then on the flip side of that, from the mortgage company standpoint, and I know you guys work with a ton of mortgage companies, how do you see people effectively, or do you really see a lot of people of effectively leveraging these different systems, whether it's the POS, the LOS, the CRM, using like a social proof tool from like reviews, things like that, all these different tools on top of like a tool like Jornaya with like Activate to actually create a more holistic system, right? Like, to me, I think I very rarely see that. That's something that, I'm not saying that we do it the best, but I think that we do it pretty good. How do you kind of see technology playing a role in, the evolution and growth of the loan officer and the mortgage company from that standpoint?
Yeah, I think technology is absolutely going to make the loan officer's job easier, but I caution in saying that because it's not going to make their job easy.
Right.
There's still the pros. There's a
Wait,
lot of
does
enablement.
it mean I don't have to do anything? Wait, I thought if I was using technology, I just hit the automate button.
Yeah, I mean, I believe, I mean, there's going to be, I do believe there's going to be a consumer shopping process that's going to be Amazon easy to getting a mortgage. That will exist one day. But that doesn't mean everything's going to be done automated and the loan officer's job's going away. That's not going to happen. Human interaction, relationships, I mean, that plays a huge role in getting a major life purchase, across the finish line in a funded loan and a consumer in their dream home. But there's a lot of chasing after customers right now. Prospects to become a customer, chasing customers to get them on the phone, to get the additional docs, et cetera, et cetera. And I think you'll see companies who provide technology to their loan officers that make that very next dial the most likely to have a consumer pick up. You're going to see automated interactions that are happening that just eliminates the amount of time where a loan officer has to sit there and think, who do I need to call next? Why do I need to call them? Have sticky notes all over the monitors of things to do. Systems will say, here's what to do next to maximize your performance. And what's going to happen is you're going to see loan officers gravitate towards the companies that are making it easiest for them to fund the most loans and help the most customers.
Yeah.
So I really do think that companies are fighting to get that edge, and that's why it's an ever again, it's a journey with no specific destinations that companies have to embrace to make things better and better, not just for themselves and funding loans today, but as a recruitment tool and a retention tool to make sure that their good loan officers stay and they have the pick of the litter when someone's looking for a new home to hang their hat. Consumers are going to have a lot more transparency. They're going to start figuring out in a much easier fashion the best place for them to go, whether that's a specific loan officer, a specific company. It's going to become easier and easier for them to see that. I think the good loan officers who do great work, are trustworthy, get loans done, have a great reputation, they're going to bubble to the top and they're going to be very successful. I think anyone that's not of that standard is really going to have to fight hard and fight on price in order to
so it's turning into a commodity now versus an experience.
Mm-hmm. Yeah.
I was going to say, I think piggybacking off what you're talking about, I think that's important to where people don't just view it as a commodity, but they, particularly with where we are nowadays, people are more interested in experiences than they are necessarily a commodity, right? And so I think if you can provide an experience, obviously pricing and all that has to be right, but even if your pricing is slightly more, but the experience that you offer is just exponentially better, I'm always willing to pay more money to have a better experience for anything.
I mean, we say Amazon easy. I bought some stuff on Amazon today. I went there and I trust that it's going to get delivered when they say it's going to get delivered, which is when I need it.
Yep.
I don't know if it was the best price. I didn't spend all the time shopping around to see if I can save, a couple of bucks.
Right.
I need to make sure that it's here tomorrow. And they've proven time and time again if they say it's going to be here tomorrow, it's going to be here tomorrow. And so I trust that. If I didn't need that, then, maybe I'll shop around quite a bit more and try and find someplace where I can get an extra, 2 or 5% off. But I need it tomorrow. Just like when consumers are getting that home purchase loan. I mean, look, we're in a huge refi boom right now. So it's kind of hard talking about purchase loans. Right. But when you think about a purchase loan, a consumer needs to make sure and have a great amount of confidence that their loan's going to get done on time so that they can get in the home and not lose it. Yeah, that's a lot of trust you're putting in someone.
Yeah, absolutely. I mean, I agree with everything that you were just saying. And that kind of leads into the next point, which is, we talked about adapting, kind of adapt or die, a lot of those things, the need to evolve, whether you're a loan officer, you're a mortgage company, the need to understand better understand the user experience, the need to understand data to really understand the user experience. What are the biggest challenges that you see right now, or do you see? Let me back up. What are the biggest challenges that you see right now in the mortgage industry in terms of like loan officers and what they're facing, and how do you think that we navigate those challenges, to come out on the other side stronger and better?
Yeah, a lot of, especially today, I mean, we're in a huge refi boom. I mean, rates have been, I don't know how many times I've kind of made a little public service announcement to my colleagues about you should be looking at refinancing to see if it makes sense for you because rates are the lowest they've ever been.
Yep.
And it seems like 4 days later, I'm sending the same message. And then a few days later, I'm sending it.
They just keep
ridiculous,
dropping.
right? Yeah, it's crazy. But thinking about, what's in the future, one of these days, this refi boom is going to be over, which leaves us with purchase business. People are always going to be looking for purchases. What drives purchases and getting those loans done and getting customers in the pipeline is really relationship based. And today it just seems like there's so many loan officers that are transactional. They get the loan, they fund the loan, they move on to the next one. And they lose sight of the relationship and the rapport building.
Yeah.
And, that's one thing that I think is a challenge today with so many refinances happening. I was just texting back and forth with a loan officer that used to be at the same company when I was running marketing. And he just said, this is insane. This is crazy. I'm so busy. It's ridiculous. And he's putting in the extra time to still send out those handwritten cards that say, thank you very much for trusting me with your mortgage and getting to know, the names of the family, the son or the daughter, whatever it is. And he's plugging those in his CRM system so he has something to reference the next time. If he ends up talking to him in a year or 3 years, he could say, hey, how's Susie doing and stuff like that. And that creates that relationship and expands on that rapport. And in all likelihood, he'll get the next transaction that family needs. So it's a challenge today because there's so much business on the refi side that I think a lot of loan officers are losing sight of the relationship.
Yeah.
It needs, you need to put in that extra, hour, even if it's an hour a day, hour a week, whatever it may be, and focus on the relationship side of things. And that's going to help a tremendous amount once we get back into this purchase cycle and this refi boom goes away, because purchases are predominantly driven by, referrals and reputation in the community and stuff like that. So I think that's how a lot of loan officers are going to come out shining on the other side is keep your side on the relationships.
No, I think that makes total sense. I mean, to me, the difference is it's like you can be an assembly line or you can be viewed as an assembly line, or you can be viewed sort of as the concierge, right? Like no one wants to get rushed in and rushed out. There's nothing worse. It's like, that's McDonald's. Do you want to go to McDonald's, or would you rather go to, a 5-star dining restaurant where, there's a valet at the front. When you walk in, there's someone there to greet you. It's like, again, going back to that whole experience where I think it actually points to the fact that I think buyer expectations have shifted and are constantly changing in terms of the level of service that they're expecting, which actually leads me into the next question, which is, how do you see customer borrower journeys evolving, and how do you think that we can best engage them, from an awareness, attention, interest, decision, and advocacy standpoint, right? I think you touched on a lot of great things, but I want to make sure that I ask that question very pointedly.
So the equation that I see, I mean, technology plus data plus human relationships is going to equal the success.
Yeah.
And, it's funny, this morning, I actually needed to call a doctor's office and get some receipts that I need to, get reimbursed through my flexible spending account.
Right.
A little tiny task that I need to take care of. I literally went to the office, I think 3 or 4 times earlier this year. It's a 3-person office.
Yeah.
It's a small little office. The phone got answered off the first ring. I said, "Oh, hi, is this Mike?" He's like, "Yeah, it is." And like, "Oh, what can we help you with?" Like, "Well, can you send me the receipts from the transactions? I need to do this." And she's like, "Oh yeah, that's no problem. Do you want me to send it to your Gmail address?" "Yeah, that would be fantastic." She's like, "Great. How's Brianne and Owen doing?" It's kind of like, where's this coming from? Like,
Right.
holy crap. I guarantee you, I called in and their phone system is tied to the computer, which popped up my profile based on caller ID lookup,
Yep.
and it had information there. Now, how did they know my wife and my son's name? I'm sure the doctor keyed it in at some point, knowing that that's important in order to, on the chart or whatever it may be, just chit-chatting and building rapport.
Yep.
It was a stupid little task that I had to take care of today that I'm now talking about on a podcast.
Exactly. Yeah. That's awesome.
So borrower expectations have changed. I wasn't expecting it on that, but if I call into my insurance company, if I call a loan officer that I'm doing a transaction with right now, I do expect you to know who I am, in all likelihood, why I'm calling,
Right.
and what the status of my loan is pretty quickly. I want to feel like I'm important to you.
Yeah.
So that expectation is there. And if we go further up funnel and think about the marketing side of things, and what I love working with our lender clients on is understanding the consumer journey. We work with banks who are monitoring their credit card customers, trying to understand when they're in market for a mortgage so that way they can cross-sell at the right time. Well, if all of a sudden I'm in market and my bank starts sending me display ads, I start getting targeted on social, I get a very relevant email coming to my inbox, that's something where it's like, this is coming at the right time. Let's see. And if I click on that email call to action, I expect to get delivered, if I'm in market for a home purchase, to go to that home purchase page. So imagine them sending me a really smart email that says, hey, Mike, are you in market for, well, let's just say it was refinance. Are you in market for a refinance? Your house at 123 Main Street? Fill out the application. Let's see if we can help you out. If I click that call to action and then you say, give me your name. What's your address? Wait a minute, your email knew all that information. When I clicked on it, why didn't the system know? Right. So the expectation of those are going to be talking together to give me that seamless experience to get my end goal in the fewest number of clicks possible. So the expectations have been are there from the borrower side. The technology, the data is available. You still have to rely on that human relationship and that human interaction to really put the cherry on top and create that seamless experience. And as I mentioned before, when I was shopping for a new home purchase mortgage, and I had the two banks using the same technology, and one delivered a great experience, the other one didn't. I was completing the application. I was like 75% of the way through the application.
You're like, no.
With the bank, and I received a phone call while on the application for someone to help me finish through the rest of the way.
Yeah.
But the reason that I was on that application in the first place is because 4 days prior to that, I was on the other bank's website filling out the application, click submit, never received an email, never received a phone call, and couldn't get a hold of anyone. So ultimately that drove me to go to that other bank where I had an incredible experience. And we ended up going, with that bank, and the loan officer would text me from time to time saying, how are things going? The expectations are there.
Yeah, you literally just took the words out of my mouth, because that's what I was hearing is, having a certain level of buyer intelligence. And then in terms of expectations, you're rising to the level and meeting the expectations, particularly when you're the one that's setting the expectations, like asking for information, but then not using the information. Makes no sense of why you would do that, right? And so that begs the question of, what do you think are the biggest changes and challenges around a lot of these things, from whether it's the technology piece, understanding the buyer journey, understanding how to leverage data with all three of those or all two of those components. What are the biggest changes and challenges you see coming down the line in the near or distant future that you think we should be aware of?
Yeah, I mean, that's tough. I mean, who knows, where we're going to be.
We're in a weird time right now.
Right. I think bottom line, the challenge is that you constantly have to put in the time to stitch together, the experience and optimize, is this working? Is that working? And something that's working today isn't going to work, tomorrow, especially in the mortgage world. It's too much changes. But it's really spending the time to go that extra inch, right? So many people, they get the kickoff, they go 99 yards, now offense comes on and they just have to get across the goal line, right? You still have to put in the work to pound it through to get across the finish line, and that's not going to stop. You always have to pay attention to what's changing. You always have to look and see what's happening, and keep at it. And that's the tough thing. You got to put in the time for all of this stuff, and a lot of people don't. They put it together once and they think it's going to work for a year. The companies that we see being very successful implement, test something else, and decide, is the challenger becoming the new champion? And then once they figure out what's working better, they begin the next test, and then the next test, and then the next test. It's the same thing with technology and data. What's the winning combination?
Yeah, no, I love that. I think that goes back to what I was kind of saying earlier. I always joke around with our creative director, because a lot of times people think some of the things that we do, it's like, just press the Photoshop button, just do that, just make it pop, just press it. And it's like, there's way more work that goes into it than just pressing a couple of buttons, right? It's putting the forethought in, and to what you're talking about, it's that continual iteration. I think a lot of times people will, they implement it the first time, and then it's like, it'll be good in perpetuity forever. And it's not the case, right? And so kind of along those same lines of what we're talking about right now, I think this dovetails really well into the next question. We talked a lot about evolving, adapting, from technology, data, all these different things that we hear a lot. But what is the biggest mind shift that you think that we need to make, or the loan officers would need to make, or that mortgage professionals need to make to really rise to the occasion and meet the expectations of home buyers?
Yeah, there's been a huge focus on technology and digital mortgage. Again, data plays a huge role in this. We can't lose sight of the fact that these are consumers, these are people, these are families that getting into homes. Right now, I think it was 30% of American homeowners who have a mortgage will save $300+ a month. That's a lot of money.
Yeah, especially right now.
Especially right now, right? So we have to remember that there's real people behind this, and keeping that top of mind. All this other stuff is needed. You need to evolve. You need to have technology. You need to have additional data. You need to make the right touch points at the right time. But it's not a number. It's not. Susie is not 323,000 in California in a single family residence, right? There's a real family behind that.
Right.
And so if people stay, thinking that, just overall being compassionate and genuine, they'll thrive, they'll be successful. And that makes up on, some lack of technology and lack of processes here and there. No one has everything buttoned up. It's fantastic at Quicken Loans S1 looked when Rocket was going through the IPO. You better believe they're testing, they're deploying new technology, and they're improving. I mean, just think about what Amazon looked like 5 years ago, 10 years ago, when you visited the website. You look today and you looked 10 years ago at Amazon, they're dramatically different. Now, you're surprised because you've been visiting Amazon, and change over time is little by little by little. But you look where they're at today and where they were then, you got to think that it's going to be the same thing. But customer experience has always been at the forefront of what they do and why they do it.
Yeah, no, I love that. So to me, sort of that mindset shift, or maybe the focus for some, is really just honing in on that user experience and making that the best possible. And rather than thinking technology first, think people first, and then leverage technology to fill in the gaps everywhere else. Would you agree with that?
Yeah, technology and data is really teeing you up to knock it out of the park. But in order to knock it out of the park, it has to be, I mean, it's really the relationship and the human interaction that's going to do that.
No, that makes total sense. So Mike, I know our time is coming to an end here in just a few minutes. So as we start wrapping up our conversation, I wanted to give you the final thought of the day, which could be what we just talked about. But if you could leave one lingering thought in the mind of our audience, what would it be and why?
Wow. I would say be curious and be obsessed with providing value to your consumers. If that's curiosity will lead you to learning more, and being obsessed with providing a great customer experience will always lead you in the right direction in your decisions.
I love it. That's a great last thought of the day. So lastly, if our audience wants to connect with you or they want to learn more about Jornaya, where can they find you and where can they learn more about Jornaya?
So Jornaya.com. You can email me at meshelman@jornaya.com. I'm on LinkedIn. Reach out, connect. I always love geeking out on mortgage. So feel free to reach out to me, and would love to chit chat, whether about Jornaya, the mortgage industry, or anything else.
Cool. Hey, Mike, thanks for joining us today. We really appreciate it. For everybody else that tuned in, we really appreciate you taking the time out of your day or your evening to tune in today. Mike, thanks again. We look forward to catching you hopefully in another episode. And to everybody else, we'll catch you later. Have a good rest of the day or the evening. See you, Mike.
Thanks. See you.
Hey, really quick before you go, if you enjoyed this content, be sure to follow us here on social and don't forget to like and share this content. Thanks for tuning in, and we'll catch you in the next episode.